Hello again. Those of you who've seen me speak in public over the last year would have seen our modified wave count for the resource sector. And those of you who are familiar with Elliott Wave know that the market generally moves up in three legs. The first leg, a correction, a next leg up, another correction, and then a final fling into a euphoric stage, and then you get a sharp correction after that. That's sort of roughly the Elliott Wave concept. But what we've found is that it's important to think of the market psychology at each stage in that wave count, and the first leg is disbelief, because it's a move up after something has happened where the market has moved down. So it's marked by disbelief. People say, yeah, it's a false dawn, yeah, it's not going to last very long. And then we get the pullback into wave two, and that's usually pessimism. The mood of the market is decidedly pessimistic, and we certainly saw that at late last year and the beginning of this year. Once that bottoms out, it moves up into the optimism leg, and that's when people become more comfortable. The market's been climbing a wall of worry, but it gets through that, and then people start to feel optimistic, and we run through this optimism leg. We then get a pullback, which people see as an opportunity of buying the dips. It becomes the opportunity leg, and people are comfortable. They're not worried about the end of the world. They say, oh well, markets will come back, it's a great opportunity to get on board, and then we go for the final euphoric run, and then we get a pullback, and it's not a good pullback in terms of market psychology, because usually it's the first pullback. People think they're going to buy the dips, but the market's really run its course. We get a rally which doesn't quite make sense, and then it turns over and runs into that pessimism stage again, and then the markets start all over again. What's been really fascinating is looking at where we stand, because last year clearly finished something, and when we look at those various stages of the market, we definitely did not have euphoria at the beginning of last year. Definitely not, because the market breadth was so poor. Institutions weren't on board, the public wasn't on board, the market had already started to turn down well before we saw the highs in gold and oil and BHP and those other large stocks. And then if we could go back, there's no way that people would have regarded January, February, March of this year as an opportunity, because the sentiment was just full of pessimism. So when we think about the end of 2008 finishing something, it didn't finish that optimism leg, because again we just didn't see the market breadth. We saw the big cap stocks up, but we didn't see the little caps there. They just did not participate. So we come back, and clearly that period last year was definitely pessimism country. So if it was pessimism country, it's finished that disbelief up leg. And the most fascinating thing is, if you look at the major commodity prices, major commodities like oil and gold, they made their lows. In the case of oil in October of 98, in the case of gold, we got a very, very important low which was retested later, but that was in March of 99. So we've basically had 10-year bull markets, 10 years of bull markets where there's really not a lot of people on board, and a lot of disbelief, if you like, and we've had that pessimism. Now people are more comfortable with the fact that hey, there's a driving factor like the American dollar weakening, or the China being strong, or India coming through, or Brazil being very strong. Those sorts of things are building up for the optimism leg, and that's where we are. We've had our first leg up, which was again disbelief. We had a correction there for a while. People worried about things. Now we're turning up, and I think things will be very, very strong from here. Let's see where we're going to be in 12 months' time, but I think that the pessimism call back there in December last year has been the right one. We're now in the optimism leg, and there's going to be a lot of excitement for investors over the next several years, because remember that first leg was 10 years of bull market before we got the pullback. We're going to have 5 or 6 in this leg. It's not going to be straight up or down, not straight up of course, but and then we've got the next leg, as I see it anyway, giving rise to that sort of 15 to 20 years that many other people are talking about in industry, where they're saying, hey, the demand for our raw materials is such that it's going to underpin the market. So watch this. It's a good roadmap, and I think it's going to take us where we want to go.